Hello, ladies and gentlemen, and I hope you're doing well. Welcome to the Monday Agenda, and your host is Carlos Banda. And today we'll be focusing our discussion on the credit finance sector with our guest, Mr. Edwin Rwasa, the CEO of Credit Info in Tanzania. Sir, thank you so much for joining us today. And how are you doing?
I'm doing really well, and I'm excited to be here. Thank
Excellent,
you so much.
excellent. So would you mind giving us a little brief about what Credit Info is all about?
All right, yeah, thank you. Well, Credit Info is a credit reference bureau. Started its operation in Tanzania back in 2013. So right now, I'll say almost 10 years have passed by. And our role or our responsibility within the financial sector is to collect, store in a secured manner, and process credit-related information back to the underwriters, lenders, with a view of supporting them to make well-informed decisions and ascertaining the creditworthiness of potential borrowers. So that's our primary role. But of course, the role itself under the credit reference regulation of the central bank of 2012 is also extended in terms of covering the entire credit life cycle. From the moment a loan has been issued, also supporting banks in terms of managing and monitoring of credit portfolios, and as well as on a correction and recoveries of bad debts.
How does that whole process of collecting data on credit scores and those who have taken loans and helping banking institutions have information about loan defaulters, make follow-ups and loan recoveries and all that? How is that connected?
If you go back to think the banking sector when it comes to financing, we are talking of a period of not less than 300 to 400 years across the world when it started. And one of the key theories around the banking sector is credit creation. Credit creation in a sense of the lenders or commercial banks acting as intermediaries between the surplus and the deficit sector of the economy. So by doing so, they are able to mobilize deposit and eventually issuing loans. And we all know, is the importance of loans or credits to the economy. It fuels the economy in a sense that it covers the gap of which the private sector are able to facilitate the acquisition of capital or to meet their immediate and long-term expenditure so as to continue with their business operation. So that's on a corporate side in terms of what credit can do on a corporate side. Mostly to support the entity or corporate in terms of investment, whether they want to invest in something, a new project will be, or they wanted to acquire assets, which I spoke about earlier on in terms of capital injected by banks to particular corporate for them to be able to facilitate in terms of acquisition of assets to support with their business operation. But also on the consumer side as well, credit has a pivotal role to play in terms of facilitating consumption, which is one of the key ingredients within the economy. If you have an economy where access to credit is readily available in a secured manner, and the cost of borrowing is significantly lower, so the expectation is that consumption definitely will be uplifted. And we all know that when consumption is uplifted, then it creates demands. And when you create a demand in an economy, you are creating employment on the supply side, meaning that as a corporate, you are able to employ people to meet those demands in terms of production. So the entire life cycle of an economy I would say, is intertwined within the credit avenue. I cannot foresee, or there's no any country in the world, not alone Tanzania, whereby the economy is operating in absence of credit, because we all know that even sovereigns, I mean, at national level, government do borrow money, and borrowing money, again, with the same reason as what I said earlier on, to facilitate expenditure, recurring expenditure, to facilitate capital investment, which again it turns into job creation, and as well as improving or enhancing collectability of future taxes, and able to meet social obligation as a government, like provision of medical, schools, and all of that.
Right. Now, understanding that you did just mention its role when it comes to investment.
Yes.
We understand that when a particular entity wants to partner or invest in a particular company, they look at the credit score of that particular second party. And if it so happens that their credit score is high, or maybe in the middle, let's say satisfactory,
yes,
they will perhaps approach it to go into a particular joint venture.
Yes.
But talking about the microeconomic sector now, which is, I think, the forgive me for putting it this way, but I think it's the place where really scratches the heads of leaders and economists on how they can actually ensure that microeconomic sector grows significantly. And we understand that a lot of people who are taking part in businesses in that particular sector struggle a lot with when it comes to finance capital, when it comes to working capital and all that. But I don't think there's enough understanding on their part when it comes to noting that I don't only need capital, but when I'm asking for capital, I need to make sure that I am creditworthy, that that my score speaks on my behalf, apart from just presenting a proposal that this is my idea, this is the business that I want to do, this is the course of action that I want to take on a particular field of expertise. But forgetting that credit score rating is very important for him or her or a particular entity to qualify. In what way do these actors in the microeconomic sector qualify, or what should they do so that they can be able to, in terms of understanding, but also to even use credit finance in terms of credit score as something that's practical for them to qualify for attracting more investments?
I think that's quite an expandable, very good question. And I think in most of the time, when you speak to anyone who's a potential borrowers, I mean, when I'm saying potential borrowers, I'm referring to anyone. Could be a consumer, you and me. Could be someone who's a sole trader. They're running their own business. Could be an entity. I think we tend to look at access to credit in a different spectrum, different from what is the underwriters, the lenders, they look at it. We tend to feel that so long as I have a business that I'm running, I have a collateral somewhere, then mostly I should be able to qualify for a credit line or for a line of credit. But in any credit underwriting environment, and here I'm speaking on the lender side, the banks is a microfinance. Both of them, they are being guided by certain procedures and the process, what we call as a risk framework within the environment, how they operate. This entails in terms of their credit policies, procedure within the institution. They need to adhere to regulation from the central bank, of course, and other regulatory authorities. So what I'm trying to highlight is that if I look back, I've worked in credit as well myself. If I look back, I've never seen a particular lender that will decline an application if that particular application has fulfilled all the checks and balances. And I'll explain to you in very simple terms, and I'll come back to your question as well. When a lender receives an application, let's say for an individual, there are key components any lender must do. They must assess what you call as a KYC or persona. Let's say it's an individual, maybe it's me. they'll assess your persona as an individual, even if you're a sole trader. They'll try to ascertain and verify certain key informations, such as your IDs that you've provided. They'll try to ascertain your address, perhaps, of your business. And once they are sufficed within the persona context, they'll move to the next two phases, which I'll speak more on credit score and its role within these two components. The first one is your ability to pay. Your ability to pay. Your ability to pay in a sense that you must demonstrate, or you must provide supportable evidence to justify that you have the ability to pay. So let's say you are running a business. If you are running a business, a lender would like to know the level of earnings in terms of your revenue that has been generated and your outflow as well, your expenditure, to be able to assess your ability to pay. Because your ability to pay is not intertwined only on incoming in terms of your inflow, the revenue. It also takes into a component of your outflows as well, how you expenditure your daily expenses. And subsequent to that, the key component which credit info comes into picture. If you are sufficed on a persona, I'm able to identify you as a person, and I can say I verify using the likes of NIDA database, and then you have verified your ability to pay. Perhaps you've provided to me maybe your pay slip, or you've provided to me maybe your bank statement, or it could be your audited financial. I'm okay with that. So the next part, which is so essential, and this is where credit info comes into picture. The credit ratings, the credit reference bureaus, they come into picture. Your willingness to pay. So your ability, I'm justifying your capacity. When I'm coming to the willingness, now this is a different avenue. It's a different avenue in a sense that I'm looking at you. Yes, you might have the ability, but your willingness, where do I get your willingness? How do I ascertain that you have demonstrated in the past your the willingness to repay loans? This is where the role of credit reference bureau like us come into picture. We collect information from multiple lenders, including microfinances, SACCOs, and banks, and then subsequently we store this information in a secured manner, and we disseminate this information upon availment of a consent from a borrower. So when you provide a consent to a lender, when you are doing your loan application, this is where a lender will be able to say, let me do a search, or let me do an inquiry from a credit reference bureau, be credit info or Dun & Bradstreet, to ascertain your previous or your historical repayment behavior. So your historical repayment behavior is actually your willingness. So if you have demonstrated in the past that several loans you took and you are able to repay them on time, then I would say you have good credit history, or I would say you have your creditworthiness is good, and hence I can actually justify that I'm able to underwrite or to issue a loan to you. So that is your reputational collateral. So the physical collateral, you might have the physical collateral. You can have perhaps maybe a house you want to mortgage. You might have maybe vehicles, you have machinery. But if a lender able to assess and see that your willingness in the past does not constitute a good creditworthiness, they might decline your application. So the whole idea of our existence is that we are able to provide reputational collaterals to lenders for them to be able to ascertain creditworthiness of someone, whether they are good or not good. And based on that, they can make a decision. Because any lender that is making a credit decision, the essence of them is to collect cash flows in the form of interest and principal. No lender outside will tell you that I'm underwriting a risky asset. I'm issuing this particular loan with a view of collecting the proceeds from the sales of a collateral. So if I finish by just give you a few narration around the credit score, a credit score It's a number. It's a numerical number, statistical number, and basically, its role is to ascertain your ability to repay or your likelihood to repay in the next 12 months. That's the role of a credit score, but it is based on historical information in terms of your repayment.
Excellent. Ladies and gentlemen, you're still watching Monday Agenda, and as I had highlighted earlier that we are discussing today issues on the credit finance sector with the CEO of Credit Info, Mr. Edwin Orasa. Now heading to the next question. Last year you signed a partnership agreement with ICRA, and the goal was to boost the economic growth of Tanzania, but most importantly, bolster financial inclusion and place companies on the global scale as potential candidates to attract partnerships and investment from reputable global firms. So since you inked an agreement with ICRA, how has that worked so far?
First and foremost, it has been well received. I would say that I think so far there's been a couple of engagement with some of the local banks and some of the local corporates. So the outlook, I would say, is very positive since we signed up that agreement. The agreement with ICRA. ICRA is a multinational credit rating agency. It's operating in a number of countries. The central bank here mandated or approved the ICRA or ICRA as the first credit rating in a country. And is that followed by Uganda as well. And they are currently, the company is currently operating as well in other jurisdictions, Pakistan and some other country in GCC, the Gulf countries. But over and above that, the MOU had a fundamental one core objective. Firstly, for the corporate, I'll speak in terms of supporting local corporate to be able to get investors from other jurisdictions, mostly Europe, America, Brazil, and as well as Middle East. And ICRA, their role is to provide credit rating services to both corporate and, of course, financial institutions. So for corporate, when a corporate is being rated by an international agency such as the ICRA, that means that corporate becomes viable to international investor in terms of them being able to provide any sort of funding, or could be acquisition of equity as well within that corporate. And also the whole idea is to facilitate trade financing for that particular corporate we see as an international corporate that are residing outside Tanzania. For financial institution, again, it's almost not necessarily similar to the normal corporate businesses, but for financial institutions is to facilitate them in quite a number of ways. One of them is to open a door for local financial institutions in Tanzania to be able to get what we call as correspondent banks agreement or partnership. Again, in broader terms, correspondent banks, these are intermediaries or agencies that are pivotal to the facilitation of international trade. So today, if you have a local bank here in Tanzania, and that particular local bank had to support some of its customers, mostly businesses, on international trade, whether it's regarding to China or to India or any other country around the world, a local bank cannot do it on its own. You need a couple of mechanisms. Apart from the infrastructure that is available worldwide, in terms of facilitation, for instance, of payment, there's one infrastructure that is being applicable. It's called SWIFT. SWIFT is a network of banks that are connected worldwide in terms of exchanging messages and the transaction information. So you need to have a correspondent bank in between. A correspondent bank in between is acting as intermediary between a local bank and another bank in another jurisdiction. So for you as a local bank to be able to get a correspondent banks, In a typical old-fashioned, I would say, in a conventional way, banks have been able, for instance, here, to leverage on some of the few correspondent banks that are well known, like Citibank, Deutsche Bank, HSBC, but there are many. If you look, for Tanzania, for instance, I think in any given day, a local bank at our end here, they might have maybe 3, 4, 5, maybe less than 5, but that's very, very minimal. In developing economies, other developing economies such as Southeast Asia, and what we have seen as well in the Middle East, one local bank can have even 10, 15, 20 correspondent banks. So I think that is an advantage. There's an advantage in terms of cost, in terms of many, many avenues. So what ICRA and Credit Info, we are trying to provide a mechanism for some of the local banks, even the smaller and regional banks, to be able to establish such a partnership with correspondent banks, and as well as to be able to forge a relationship with other banks in other jurisdictions. But you can only do so, one of the key enablers is for you to be rated. So when some of our financial institutions, like regional banks, I'm not speaking of the first tier 1, I'm speaking of the regional and mid-tier and perhaps tier 2, if they are able to be rated, then they're standing a bigger chance of actually being able to establish such a relationship, which is so essential within the international markets. So I think that's a key fundamental role of ICRI, ICRA, and Credit Info. And of course, the other one again is to facilitate access to international investors or international funding. Local banks, some of them, they are so big here in Tanzania, but also they require some sort of access to capital markets and the international investors. There are international investors such as IFC, such as Propaco, quite a number of them that are currently supporting local banks here. But we would like to see more.
So understanding that all these things fall in one platter, and understanding now the vitality of credit rating, what has been the most notable challenge when it comes to most Tanzanian firms, especially understanding that one, as you had highlighted earlier, that for one to qualify to access credit, several things are being looked at.
Yeah.
Not only your inflows, but also your outflows.
Yes, very true.
And not only when it comes to the amount of collateral that you have in terms of assets. Now, when it comes to this case, we've been seeing a number of cases where a particular institution applies for a particular loan in billions or maybe millions of shillings to fund a particular project, and then along the way they announce that they have gone completely bankrupt and they lose everything. So in that kind of context, what are the most common indicators that show that perhaps this is a particular area that needs to be addressed to ensure that Tanzanian firms do not go and announce bankruptcy anymore, but they become way more credit-worthy?
Yeah, I mean, we can look at it from two angles, I would say. One from the supply and another one from the demand side of the equation. On the demand side, you are looking at an entity, could be a bank, it could be a corporate, that are looking for funding. On the supply side, you're looking again, could be a local bank or could be an international investor wanted to provide some funding locally. So the key issue, if we take everything out of the equation, because when talk of defaulting situation or which resulted into bankruptcy, as you said, there are many moving parties. It's not necessarily that the assessment at a point of underwriting, at a point of issuing that particular funding or loans was not adequate, not necessary. It could be there are some other macro factors. I will give you an example. For instance, do you remember during COVID, no one really forecasted, maybe if you go back in 2018, no one really forecasted we are heading toward a pandemic that will cause quite an havoc across the world. But if you look at the impact of COVID, I don't know if there's any empirical research that has been done, especially to our side, Tanzania, to ascertain the impact of COVID to the lenders and as well as to the corporate entity. So in such a situation, what I'm trying to highlight is that there are certain scenarios that might occur within the life cycle of an economy that might actually deflected the business objective, and hence a particular entity, could be a bank or could be a corporate, ended up in a situation, as you said, bankrupt. But I think the other aspect, if you take that out of the equation and you make everything constant, you find actually the key fundamental issue into the equation is information asymmetry. Information asymmetry meaning that you are making a decision without knowing the unknown. Let me put that way. Meaning that as a lender, you are underwriting a risky asset or you are issuing a credit line with limited information. And this is where the role of ICRA and credit info comes into picture. We wanted foreign investors, could be a company, could be a financial institution, for them to be at a position to assess local entity residing in Tanzania, be a financial institution, be a corporate, with adequate information. Let me put that way. So if we put the cost of credit rating aside and everything, we wanted such an investor or such an entity sitting outside to have adequate information when they are doing their due diligence. If such information can be available, as aspect, as I said, as events, we cannot really forecast them to a greater extent, whether they might occur or not. Like what I said is the issue of a pandemic such as a COVID. So to speak, I mean, that's the essence of our existence as a credit reference bureau. When we say that we are providing credit-related information to a particular commercial bank, we wanted that particular commercial bank at a point of issuing a loan to be well informed about the potential borrower or the applicant that is making a loan application. So that even if in the future, whether that particular borrower declared bankrupt or there is any issue which has limited them to continue servicing the loan, there's no any fallback for that particular institution, a commercial bank, to say that they made a decision with limited information. And this again is quite pivotal, and I would like SQL to sensitize, meaning that I'll speak on a local context. I'll leave aside the ICRA aside. Over the last 10 years, we as a credit info, as a credit reference bureau, we have been able to work hands in hands with the central bank, together with our counterpart, DNB, in terms of the central bank supporting us, getting access to the relevant information that are much needed within the lending space. Information such as access to NIDA database, information such as access to Tanzania Revenue Authority, information such as access to other databases like National Housing. We have signed with them an MOU. All this information are much needed when a lender wanted to assess a credit applicant. So I would like again to sensitize to some of the local authorities to ensure that they are forging a great relationship with Credit Reference Bureau for the provision of credit-related information that should enable lenders to make a well-informed decision upon credit underwriting, and as well as to facilitate the growth of credit in our economy.
Excellent. Now, heading to the other question, you recently launched a digital loan recovery technology.
Yes.
I think it was last week or so.
Yes.
In a bid to digitalize and simplify loan recovery, and in what ways now will this approach help the financial sector? Yeah. Because we know that we've always had these conventional ways of collecting loans. We have a team of individuals who wait until they get the green light to to approach the defaulter physically, maybe auction his properties and get the money back, even though it won't be of the same value as the amount of loans.
Very true.
In terms of monetary value that he had taken. Now, since this whole thing will be digitalized, and noting that among the features that I noted was you're also giving the opportunity for the defaulters to communicate their payment plan, that I've taken 2 billion, but in this particular time, with my current financial situation, I'm not capable of paying the agreed amount of installment for a particular, at the end of the month as agreed. So this is my payment plan. Perhaps I'll be able to pay 200 million for this particular time, and until maybe 6 months later, I'll be able to recover and pay the whole remainder of the amount. So with this technology already rolled out, how vital is it? What is its vitality when it comes to contributing to the growth of the financial sector, but also on your part as a credit rating bureau?
Thank you. Actually, if you recall, when we started the interview, I mentioned that the role of a credit reference bureau is not contained within the underwriting space, within the origination, in terms of supporting lender when it comes to issuance of loans. We are supporting lenders across the entire credit life cycle. So having said that, collection and recoveries is one of our roles as well, in terms of providing different peripheral solution or platform like FinView, and as well as the right information for lenders to be able to trace the whereabouts of defaulters. So having said that, both Credit Reference Bureau, they have different solutions, both Credit Info and Dun & Bradstreet, DNB. Both of us, we have different solutions to support lenders within that space. But what we observed as a Credit Info, over the last 10 years, there's been quite an exponential, and I'm using exponential word very carefully. If you look, when we started back in 2013, I think our database was around less than 1 million, I would say, unique subjects in terms of unique borrowers. But fast forward 10 years, now we are talking of at least 9 million unique subjects. But that's not the interesting part that I wanted to highlight. What I wanted to highlight is that out of the 9 million, very fascinating is that almost 55 to 60% of that are coming from digital lenders, or digital product, let me put that way, digital products. And digital products, we are talking of all these products that individual consumers are accessing them via their smartphones. It could be the Songesha, the Empower, all of this one, which are supported by MNO. And credit to the MNO, honestly speaking, credit to the MNO for actually uplifting significant population of our country in terms of access to credit via the digital channel. So if we are able to have at least 60% of the 55 to 60% of the underwriting via digital channels, so my question is, we are able to issue loans to individuals that we are not meeting face to face. We are using data. Your wallet transaction we are using to justify your limit or the amount of credit we can give you. So why not using the same data, the same digital mechanism to collect when they defaulted? So that's one argument. Another argument of why we came up with this solution as well is cost effective. You wanted to collect a 10,000, 20,000 outstanding balance from someone, let's say, who was defaulted from a particular digital product. Is it worth really to have someone sitting in an office making a call to that person? You can see how cost effective it is when you are bringing the digital platforms such as FinView. So FinView, it provides such avenue for underwriter to see that, yes, if someone defaulted within my digital product, I'm able as well to chase that particular defaulter or that particular person, individual or consumer via digital mechanism. But also, we identify another avenue as well, or I would say another side of the equation, whereby traditionally there is only one-way trafficking. If you defaulted, I'm the one who can only initiate the engagement as a lender. I'm the one that will establish contact. I'm the one that will determine, even to a greater extent, I will use the word dictate. Dictate. Dictate is a content of the terms in terms of your repayment. But we ask ourselves, why can't we have a reciprocity avenue, whereby even defaulters, yes, they've defaulted, but they've defaulted, there are many reasons why people default. It's not necessarily that people are defaulting because there is no willingness, but capacity is there. There could be challenges they are facing in their daily life. So why not open up such an avenue where someone who has failed, and I'm not using the word defaulters, I'm saying someone who has failed to meet their loan obligation, they are able to contact you. They can contact you at their own time. Yes, of course, you continue to contact them, but they can establish contact at their own time as well. And the regulation, actually, the Banking Act under the Management of Risk Asset Regulation and the Credit Accommodation Regulation does permit what we call as the restructuring of loans. Of course, there are some caveats around how can you restructure an account, depend on the stages of where the account is sitting, whether the account is sitting on non-performing or it's a write-off. There are some provisions around that. But it does provide an avenue for restructuring. So we are saying let a defaulter or let someone who has failed to repay you able to initiate an engagement with the lender and request for a payment plan. I think that to me is a revolution. I mean, it's not just FinView is not just a technological innovation solution. To me, it's a value innovation solution. It adds value to the ecosystem, and also it supports both lenders and debtors on an eco-basis manner in terms of the engagement.
I have a bit of a challenge there.
Yes.
You highlighted that with that technology, apart from just giving that platform of conversation again between the lender and the borrower, I'm still having a problem here. What if let's take a real life scenario here.
Yeah.
Someone applies for a loan, let's say from a particular telco, without having to mention names anyway. And then after a particular time, when the deadline is active, he's supposed to return that money. But since he's not financially capable of doing that, he decides to switch telcos.
Yes.
Now, in that kind of a scenario, talking about a banking sector, let's say, they have all the data that this person lives here, does so and so. We have all the information, but the guy decides to go black. How then will you be able to recover such a person who's decided to go dark?
Yeah, I mean that's quite an obvious situation, and it happens very often. But I think I would like us to rephrase it a bit. Why that is happening? Is it happening because there is no avenue for debtors, or someone, as you said, who has failed to meet their obligation to be able to communicate with the lender? Because remember, I applied via a digital channel, a smartphone. I'm still having a smartphone. And if I cannot repay that particular loan, and if there is no any avenue for me to communicate back to the lender, the only option I have is either number one, to wait until I receive a call or a text. And if I don't receive those two, in most cases, most digital borrowers, if you do your research, they might not even be in a position to know who the actual lender is. And that's, again, it's a different discussion perhaps we can have. But if I don't know who the actual lender is, because I received a message saying that you are qualifying for 10,000, for instance, and you can utilize it any time. And I wanted to buy Luku, maybe I purchased for 5,000, so my balance has remained maybe, I don't know, 5,000, something like that. And at that point, I don't know who the lender is. So if someone is providing to me an avenue whereby I can actually communicate with the lender. So if I'm facing challenges due to any other reasons, then I think I have a fallback. And I say, okay, let me just say, communicate with the lender. But in the current situation, there is no such avenue. So in absence of that, we are creating a passiveness of saying that people are not willing to pay. They're not willing to pay because someone took a loan and they went blank, as you said. But to me, I look at it from a different angle. Someone could be facing some challenges within their normal daily life. Maybe he or she is sick. Maybe they encounter some challenges and they've lost their phones. Could be many reasons. And you can only ascertain or clearly able to understand the underlying causality of why they're not paying you if you have established a mechanism where they can communicate back to you. But at this point in time, there is no such avenue.
All right.
So with FinView, we are providing that, that avenue.
Yeah, so lastly,
Yes.
just to wind things up, I'd like you to answer two questions very briefly.
Okay.
Understanding that now this technology is rolled out,
Yes,
the digital
correct.
collections system, how does it assure the survival of firms that were being hired in the past to do loan recovery?
Yeah.
That's one. But secondly, what is your call to society now and the public, including the government, when it comes to the whole idea that we need to embrace digitalization when it comes to application of loans, following ups, reigniting dialogues, but also ensuring that when someone applies for a loan, they don't have to go dark.
Yeah, very true.
But rather they should try to find a means of engagement that is more conducive for a win-win situation actually between both parties. Very briefly.
Yeah, I think on a first, let me start with the last one. I think the role of the government has been seen during the last 10 years. The government, through the central bank, has been very, very supportive to us in terms of opening up doors to different government authorities, and we have been able, through the last 10 years, to sign up or to be given access to some of the key government databases, such as NIDA. So the government role ourselves has been really, really positive, and we are hoping that we'll see such a continuation going forward. To the individual consumers and corporate or anyone who has borrowed money, and this is personally, my humble request is that irrespective of the circumstance, if you've borrowed money, please make sure that you establish contact, whether you will establish those contacts via FinView, Credit Info Digital Collection Platform, or you will establish those contacts via visiting respective lenders to their branches or offices, and make sure you open up such a dialogue to them, providing the indication of why you are not able to meet those obligations, because the regulation does protect you. Under the Management of Risk Asset Credit Accommodation Regulation, there are certain provisions there around the restructuring of loans. You can use that to your advantage, communicate to lenders that at this point in time I'm facing financial difficulty and I cannot meet his immediate obligation, and hence I'm requesting for my loan or my credit line to be restructured. And that avenue is supported by the central bank and the existing regulatory framework. So don't sit, don't run, and don't hide. Just make sure that you communicate with the lender at the right time.
Excellent. Right. Ladies and gentlemen, that concludes our program for today. I'll be looking forward to seeing you next time on another topic, another avenue. Keep watching Capital TV. Cheers.
Watch Capital Television on our digital media platforms on YouTube, Capital Television Tanzania, Facebook, Capital Television Tanzania, and on Instagram, Capital TV TZ. Digitech Decoder